In today's video, we're going to look at the impact of the FOMC meeting, and it really impacted markets. I'm also going to take you through a trade on Solana and get you prepared for what's coming next. Let's run the numbers. The FOMC meeting brought a lot of turbulence into the market, and we can see that the FOMC left the federal funds rate exactly where it was and as anticipated. During the conference, Fed Chairman Jerome Powell said that they believe that the policy rate is at its peak, and they'll begin dialing back policy restraints sometime this year, but they weren't specific when. If inflation picks up, they'll hold the federal funds rate for longer if appropriate. The question is, how did the markets react to the FOMC meeting? Doing your daily cheat sheet is really important because what you'll notice when the DXY comes down, especially if it's accompanied by the US 2 and the US 10-year yield coming down, that will rally crypto and also the stock market. This is because of Rule 446. All markets, and the key here is all markets. They're intercorrelated and interdependent. That means they depend on each other. If one thing goes up, you'll find another thing goes up and some other things go down. The key is to figure out those interrelationships. With the DXY decaying down, the US 2 and the US 10-year decaying down, we expect the euro dollar, the Aussie dollar to be rallying. And of course, Bitcoin, crypto, and the stock market. We also anticipate that dollar yen will be making its way down with the DXY, and that's also what's happening currently. When we look at total crypto market cap, we can see that it's absolutely been rallying since the FOMC meeting. But do notice this, it came down and then reflected back up. These kind of traps are very, very common. Structurally, the S&P 500 made an all-time new high. A lot of people think this is price discovery. This is not price discovery. There are always levels of resistance above. Ken, how can you say that? Okay, let's pop on the indicator and let's see. Oh, Ken, there's no area of resistance above. But wait, there's more. Up around that 52.55, there's some fairly substantial resistance for the SPX, the S&P 500. Just keep this on your radar. These lines are drawn up with a standards-based methodology that actually examines more than 55,000 days worth of data. And you can see that price is always getting up to these structural levels. If it can get above, where's it going? You got it to the next one above. But if it can't make it through, it's going to the one below. The Nasdaq has been trading in excess of 18,500 days, and it's done really, really well, and it's getting up to a structural resistance level at 16,377. We can see that Apple has been powering away. It's been doing really well, but where is the structural resistance? Is it a fresh air gap above? Or have we got a lot of structural support underneath? Let's pop on the indicator and get our X-ray vision out. Knowing your structural levels is absolutely critical, and look at what's happening inside Apple's structure. From 178 up to that 179, there is a ton of structural overhead resistance. Now, what does that mean? It literally means as we come into structural overhead resistance, we can get pushed down. Getting through structural overhead resistance is really difficult. In times like this, you may see this flatlining if there are a lot of buyers entering the market, and we would anticipate that, or a bit of a retracement, which allows you to dollar cost average in to just crunch through all of these sellers. Understanding where structural support and structural resistance levels are is incredibly important. Nvidia is a bit of a darling of the stock market at the moment, but it's been around since 1999. That's over 9,000 days worth of data. Let's pop on the indicator to see where these structural levels are. This structure is called CTKS structure. It is very, very powerful. What you can see with Nvidia, it's been caught by structure and it's seeking to try to break through, but it hasn't had much success. But with the overall markets coming up, we would anticipate Nvidia to tackle this 912 level and then move above. Always have your three-dimensional risk management and know, what if the bears just gained control and somehow pushed Nvidia down? Knowing where your structural levels are is literally a safety net. For example, as Nvidia was just going for it up and up and up, if you knew where your structural levels were, you could dollar cost average in so incredibly effectively. Turning to the crypto market, Solana is a community favorite, so let's pop on where the structure is inside Solana. We can see Solana's structure was having a terrible time around just under 184. And of course, with the FOMC, things get a little bit bananas inside the market, and we were getting some negative price action just recently. That's reversed around, but with three-dimensional thinking, we're always prepared. As a trader and investor, you've always got to balance your risk versus your opportunity. Now, I want to show you just one level of a trade that I did in Solana in the past 24 hours. You can see that I bought here at 173.36. This is just one level, and I sold up here at 188.17. The general consensus in the market was Bitcoin is going to $9,000, and on BitMEX it did. One of our mottos inside our global family is start small and scale. I was looking at all this structural support underneath here, and I knew the FOMC gets really choppy. The FOMC is notorious for liquidating longs and shorts simultaneously. The specific level that I put in on this trade was just to demonstrate that you can scale up and make some serious dollars. I'll show you the trade. You can see that I bought Solana at that 173.36 and I later sold it at that 188.17. I wasn't putting $100 or $50, I put $10,000 in and it returned $853 US worth of profit. If I didn't know my structural levels, I would have never put $10,000 into a trade. Now let's have a look at the return on investment from these two. The buy level is the absolute investment. That's what we pop in here. The gross absolute return is that. That's how much profit we made, and that's the profit as a percentage. But the key is that we turned it in under 24 hours. That creates a gross annualized and a net annualized return on investment that is pretty eye-watering. If you look at it, it's not a really significant level. It's just normal price action. You could be doing this again and again and again. Recently, I've been putting out posts on X/Twitter. Please don't run away from the markets on the red. You want to be running into the markets on the red. But if you know what you're doing, I believe one of the most important things is to understand CTKS structure, which marks up all of price history, and it does it according to 2 levels of standard certification. With this knowledge, I knew that there was a lot of underpinning structure below, and I just wanted to demonstrate how also you could scale up. Doing the cheat sheet can help you avoid issues like this. When we look at the US 10-year yield, you can see it's spiked down and then spiked up simultaneously. This is to sweep all the longs and the shorts out of the market. And you'll probably see on social media many crunched up computers as a result of this. This is unfortunately to be expected. This is what the institutional players do. Instead of being a victim to it, you want to take advantage of it. That's exactly what I did with the Solana trade, because I knew that the yields are absolutely related to crypto. The question is, do we anticipate follow through? Absolutely. Look at the S&P 500 futures. They're going ballistic. The NASDAQ futures, the Russell 2000 futures, and the Dow. That's going to spill in to the major market indices globally. Expect a rally globally across the board, but also just be prepared, because when things go up, they do come down, because it's always moving in a wave. So even if we get a minor retracement here, the momentum is to the positive side. The reason that I shared that Solana trade, I just want you to understand how much money is on the table if you are not afraid of getting in on the red. You can see it's just a very small movement in Solana, but imagine if you could place more. If you become an expert at spot trading, you can, just when the stars align, you can just scale up. And there's a lot of money on the table to do so. But if you scale up before you're an expert at spot, you will wipe yourself out financially. If you don't understand the intercorrelations and interconnections between different charts, for example, if you don't know why gold and silver are rallying at the moment, you don't understand the intercorrelations and interconnections. And this is something that you can just focus on. And if you don't understand it, please let me know in the comments and I'll go through it in an upcoming video. The other thing that you want to bear in mind is that there are always news events happening inside the crypto market. For example, Gary Gensler is purportedly going after Ethereum and saying, ooh, Ether's a security. It's only the number 2 crypto. Gary, overreach Gensler, at it again. We've seen Gary Gensler attack, well, the SEC attack the crypto market before, and it can turn a little bit ugly, so just be prepared with your CTKS risk management. Understand what you would do if Ethereum came down or went up, because don't forget, as Bitcoin, well, you can see it right here, the blue line is Bitcoin's price direction and correlation. Look at it, it's just perfectly matching Ethereum's. Just something to be aware of. Now, how do you translate that into some practicality? If Bitcoin continues to go up, Ethereum will say, forget about it, Gary, I'm going up. But if Bitcoin starts to retrace down, that's a different kettle of fish. Ethereum is likely to sell down more as people get freaked out. When you're a professional, you must know the intercorrelation and interdependence between the charts, but also be able to read retail sentiment. Retail is always afraid. Professionals are always prepared. There is a stark contrast between the two groups. And of course, everybody starts retail. It's just the nature. Nobody wants to lose money. So as soon as they see things coming down, of course they sell. It's human nature. And when they see things coming up, of course they buy. And when they see it coming down, of course they sell. And when they see it coming up, you get the idea. That's the retail view of the markets. The professional view of the markets is completely different. We know where the structural levels are, and we can lean in, especially at weight if it's strong. Knowing your structural levels, and especially knowing Bitcoin structural levels, is incredibly important. If you don't know the structure, you're forever guessing. That will put you in the retail camp. If you're in the retail camp, you will be terrified. Every time price goes down, you'll be selling. And every time it goes up, you'll be buying. And when it comes down, you'll be selling. I call it the death of 1,000 cuts. And we've all been through it. Don't worry. It's just a rite of passage. So if you find yourself there now, don't worry too much about it. Just seek to learn. The first great learning is where the CTKS structure is, and we can see inside Bitcoin. Bitcoin has crunched up through so many structural resistance levels and is seeking to convert them into support. Just pay attention around that $67,000 mark. Now, if Bitcoin really goes for it, where is the next structural level? Well, you'll need to get the indicator for that. No, just kidding. Well, it's really good if you do, but the concept is it's quite a way away. It's literally up here. Wow, look at that. The 71,777 mark. Just phenomenal. So we could see some explosive moves in Bitcoin. I was just joking around there a bit. In terms of the indicator, you can actually learn the CTKS method yourself and mark up your own charts. We had so many incredible comments in yesterday's video. We have such a beautiful, helpful global family. They just want to help each other out. And that's what we're all about as a community. Now, how will retail interpret something like this? If they know the structure, they know that there's a lot of potential positive momentum that could get literally unleashed. But if they're professional, they're also countering for the fact that we've come up through so many structural levels that taking a bit of a breather is actually quite necessary. So, what does that mean? Professionals will keep an eye on this 71,777 mark and also keep an eye on how price is interrelating with structure. If it continues to stay strong, and we can see it's just like literally just getting a little bit weaker at the current time. Why is that? Because it's come up through so much structure. Like $212 billion has piled into crypto market cap. Of course, that's a significant change and will need to be digested. Personally, I would be looking around here for an entry, but there's nothing wrong with the participation levels, so you decrease your FOMO. And also, people like to know how to scale in. You can scale in at structural levels. It's a really good thing, because if you get one of those wicked wicks down, followed by a wicked reversal up, hey, you've taken advantage of it. But Ken, what if I miss the move? Well, that's always on the cards as well. And realistically, you saw with the trade inside Solana, I just took the sweet spot inside the market. I don't care about nailing the bottom, and I don't care about nailing the top of any specific move. Just participating and getting a good return. That's all it's really all about. To move from retail to professional is not that easy. It takes a lot of dedication and commitment. The first thing that you realistically need to do is to understand the intercorrelation and interconnection between the Tier 1, Tier 2, and Tier 3 charts. The Tier 1 charts are the engine of financial markets globally. There's a free downloadable cheat sheet at CTKSMethod.org which will help you understand the nature of the interrelationships across the Tier 1, Tier 2, and Tier 3 charts. That is absolutely the first step. But the real step is to understand the CTKS structure because it determines the price waves. Literally, CTKS structure determines where price can go. We see it play out time and time and time again. If price is coming down, it's coming down into a structural level. If price is going up, it's coming up into a structural level. So if you know where these structural levels are, you can do trades like I did with Solana. But you must get your emotional control well and truly under control before doing so. That's why I suggest you just really start small and then just scale up and up and up. Don't worry about racing into leverage. Learning a new skill takes time. It's important to be kind to yourself. The markets are not going away. There will always be huge opportunities inside the crypto market. And indeed, across every market. And we're going through stocks, indices, commodities, forex, everything, as well as crypto in that cheat sheet. So it's a really good way to keep on top of everything that's going on. And you can also get the trading view indicators for all the Tier 1, Tier 2, and Tier 3 charts from CTKSMethod.org. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again tomorrow. Bye for now.